Baby boomers are all retiring worldwide right now, the biggest pool of capital, and you do not have a skilled workforce to replace them. You do not have a bigger generation behind them to invest, to offset the loss of investments. And it's all happening with a supply shock and an energy shortage. It is a perfect storm. What is going on, everybody? This is Andrew from DeFiancy. So we are looking at Bitcoin right now. If you're looking at my screen, I got the chart up on TradingView. Also have my DOM up. This is on XO charts, and we're just kind of looking at the market. Today's been kind of slow, relatively speaking. Let me actually change to a 1 minute here. Or actually, let's zoom out to like a 1 hour. Talk a little bit about Bitcoin. So over the weekend we had this big dump, right? It was really aggressive. I forgot where it started, but I think it was like around 20K. Dumped all the way down here to like 17.5-ish. We got a nice little relief bounce up to 21.6, 21.7. There was a lot of absorption up here if you were actually looking at the order flow, which is not surprising, to be honest. And now we're sitting here about 20.1K. So let me just kind of give you like a little summary on kind of where my head's at here. I think people are kind of overthinking this in general. Let me put my volume profile on. See, if you actually look at the volume profile here, this is a pretty balanced situation here, meaning there really isn't a whole lot of selling compared to buying, or buying compared to selling. Basically what that means is the market is pretty balanced. Some people would say confused. I wouldn't say confused. It's just there really isn't a narrative to really push us much higher or lower. However, we are in a bear market, and things tend to just kind of want to go with the previous momentum, which is down. So that's why I am kind of leaning to the downside here. If you look at this pattern, this is not a really bullish pattern. Some people think that this is a bullish pattern. I don't know why. I guess if you zoom out, it doesn't look awful. I mean, I could see how people would think this looks okay. Personally, I guess I look at things more from a day trading perspective. I'm not interested in really longing in this thing with any kind of conviction until we get down here to 19.2. I could see this doing something like this. Maybe it tries a little bit higher. I don't really know how high it'd go. But at some point, I think it's going to come down here. And that would be good if you did want to buy and it bounced off there, because you're getting some kind of confirmation. Right now, there's no... This is what I try to tell people. Like, put yourself in a hedge fund, like in their shoes. Now, a lot of people don't know how they operate, but it's kind of common sense. If you're going to deploy a lot of capital back into the market, don't you want to have a little bit of confirmation? It's kind of like when you cross the road, like or you get on the interstate. Like you look twice. You don't just look at the road, the left and the right, and then go. You look at the left. You look at the right, and you look back at the left again. You want confirmation. Like human beings need confirmation before they make big decisions. Okay, so this is really common sense. Like, we're not going to go much higher until we go down. So if you are wanting to see a big move up, don't expect it until you go down first. Okay. Now, the question will be, will it actually bounce here? And I actually think it will probably bounce here. However, I still don't think you get that much higher. I think you're much more likely to range in this area here, at least until FOMC. Okay, so that's the Fed meeting, or really the CPI print, which is, I think that's before the 4th of July. But, in like a week or two, you're going to get that out. And then you're going to get FOMC like a couple days after that, or a few days after that. So I'm just going to play this range, as a scalp trader. That's typically what I do anyway. If you're looking for a momentum, big moves, well, you already missed it, really. This was the big move, off this bottom and then up to here. So, let me just reiterate one more time. this is going to be a scalpy, choppy market because there really isn't a very strong narrative in either direction. I mean, technically, there's still a pretty bearish narrative if you really zoom out. However, the market, has been going down, and a lot of people think that a lot of the bearish narrative is priced in, which it probably is to a certain extent. But the reality is there is momentum down, and we don't really know how low these markets can go. Okay, the whole idea about like a relief bounce, in my opinion, is really kind of a stupid idea in this particular situation. Now, relief bounces are really never logical, to be honest. I think they're more logical at times. But if you really think about it, a relief bounce is really like in a bear market, that like a real bear market where things are actually messed up, is really stupid. To put it plainly, because you're basically assuming someone else is going to buy it after you. And that's not really a trading thesis. I mean, to be fair, that it's not the worst thesis. I mean, that's kind of what you do when you day trade, is you assume that, you're going to have carried momentum in a particular direction when you enter. But what I'm saying is anything past a scalp trade doesn't make any sense. So like if you're just expecting continuity in this relief bounce, you're kind of fooling yourself, because you're expecting the market to be dumb and to buy when they really shouldn't be. Okay, so I don't really like the idea of a relief bounce without a shift in Fed policy. It simply just doesn't make sense to me. Now, to be fair, markets aren't rational and it can happen. But I think that this is not a normal bear market here. There's nothing normal about this bear market. I know a lot of people, say, oh, well, that's what they say every bear market. Well, maybe they do, but there really are some structural issues in the what we call the world right now, from a socio-economic standpoint, from a geopolitical standpoint, that are unprecedented. We have supply shortages, we have roaring inflation. Yes, that has happened before in the past, but the difference for me is we have a demographic collapse happening simultaneously. And I'm not going to get into my theory on demographics. You can do your own research on that. But that is unprecedented. We've never been in a situation where the generation behind us, or the generations behind the generation that's going out right now, which is the baby boomers, is smaller than the baby boomers. Okay, that's never happened before. Meaning, the baby boomers, technically millennials, are the largest generation ever, but Generation Z is the smallest. Okay, and Generation X, which is above the millennials, are actually smaller than baby boomers. In the United States, this demographic reduction, so it's basically, if you look around the world, most countries right now have an inverted triangle when it comes to their demographics. The reason why this is important is we've never had a bear market where we've had demographic collapses around the world all happening simultaneously. Now, in the United States, we're more like a square. Like, our demographics is actually not as bad. Like, China has the worst demographics in the world. Their population is declining or being reduced faster than any on human record. It's enormous. So I don't want to compare everyone to them, but a lot of countries, pretty much on average, in terms of industrialized countries, has a similar demographic profile to this. I'm going to get off this subject, but when you really think about this logically, markets are just not going to be able to continue to chug along like they have the last few decades when you have less people to buy in. So the biggest pull of capital is boomers. They are retiring every year, and it's just going to speed up, and they're liquidating their assets. This is why I think for the next decade, things are, or maybe more, things are not going to be like they've been. And this is kind of I can't believe that I'm saying this, but I guess it's true. This is sort of a contrarian idea. Like, there's not a lot of people that are talking about this demographic collapse worldwide. To me, it's the most important factor when you talk about markets going forward, because it's like, it's something you can't avoid. It's like hard line numbers, facts, thermodynamics, really. There's just simply less people to produce things. There's less people to buy things. There's less people to invest in things. Population collapse is not good for markets. And we don't really know how to deal with this. Now, a lot of people have theories with AI and that'll offset it, yada, 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 but that's theory. We don't really know if robotics will be able to offset the loss of production that we're going to lose from the boomers, right? They're the most skilled, they're the most skilled generation in the labor force today. So anyway, I'm mentioning this to say, this is why the bear market is so interesting to me. It's because baby boomers are all retiring worldwide right now, the biggest pool of capital, and you do not have a skilled workforce to replace them. You do not have a bigger generation behind them to invest, to offset the loss of investments. And it's all happening with a supply shock and an energy shortage. It is a perfect storm for financial markets, as far as I'm concerned. Like the economic hurricane statement by Jamie Dimon is pretty accurate, actually. Now, I think they knew about this far before they had mentioned that publicly. I think this was widely known last year. But anyway, this is why I have been bearish really since like November. Like once I started to realize the energy situation and the demographic situation, it just becomes obvious to me that these are hurdles that are just not going to be easily they're not easy to overcome. Okay? Like, you can try to do all this mental gymnastics to say how it's not that big of a deal, but it just simply doesn't, the math doesn't add up. So, but the energy crisis, which translates into a food crisis, which translates into civil unrest, which then translates into political unrest, is a whole nother part of this, whole nother part of the story that hasn't even unfolded yet. That's the next chapter. That's what we get into next few months is, because we have an energy crisis, there's less fertilizers. Because fertilizers are derived from natural gas, most of them, or some of the critical ones. There's actually different kinds of fertilizers, but many of them are derived from natural gas. Okay. We have a natural gas shortage. Okay. A lot of this has to do with Russia, but honestly, we were going to have a shortage even without Russia. That just kind of exacerbated the situation, in my opinion. And you're not going to have as many crops to pick come harvest season, which is around September, October, or something like that. So I think that's when the food crisis really starts to really take effect, and that's a whole nother video, to be honest. But I want to say that, like, this is why I'm not bullish until we get through that, and probably several years after that before I think you could be really bullish, because this is going to take a while to play out. I don't think people understand that the socio-economic system we call the world, it doesn't, you can't just shift gears quickly. So when we had the COVID lockdowns, we introduced an enormous shock to the system that is just now starting to play out. It takes months and years for these shocks to play out. We're just now starting to feel the effects. COVID was like 2 years ago. So I think you could easily see several years before we're able to stabilize the transient effects of those changes and the conditions of our socio-economic system. Okay. Anyway, that's really all I have on that. There's actually another thing I want to mention. Let's go to Twitter. Let's pull my Twitter over here. Let's talk about 3AC here, and let's talk about Voyager. See if I can pull up a good tweet on this so you have something to look at. Here we go. So if you didn't know, 3AC has basically become, or not basically, they are insolvent. They made some bets after Luna collapsed. The theory is they tried to, they lost like $500 million, over $500 million when Luna collapsed. The theory is they tried to make it all back, so to speak, as we say in trading. After that happened, they levered up. Anyway, they basically lost all of their capital. And they had taken money from different players in the industry. One of them is Voyager. Now, I'm mentioning this to say, and I'm not fudding Voyager right now, but Voyager basically gave them like over $350 million. I saw somewhere else where it was like 500 million. I don't know exactly the number, but anyway, basically Voyager is they're the ones that are out of that money now. Okay, and that's probably going to affect customers if they are not able to get that back. So be careful. I do believe that from what I've seen, they have secured a loan or credit line from FTX. So I do think you're going to be fine if you're a Voyager customer, but it is important to know this. This is drama that actually happened over the weekend, and a lot of people think this is probably okay, it's settled, okay. But I think people should be aware that these, like if you're using a lending protocol or a lending platform right now in crypto, you need to be vigilant and understand that there's some risk associated with this. If it's a DeFi lending platform, it's a little bit different. If it's transparent, you can kind of you could figure out pretty quick if they if the funds are there or not. But with these CeFi companies, it's not as opaque, or it is opaque. It's not very clear. Okay, it's not very clear sometimes what they're actually doing under the hood, which is not necessarily a bad thing. I think CeFi does have a role. I'm not like anti-CeFi. Okay, I do think it has a role, and it is a middleman, and they have their place. But people just need to be aware of this, because if you were a Celsius customer, you're probably wishing right now that you got out before all that happened, right? And again, I'm not saying this is going to happen to Voyager, but if you do have funds on there, it'd be nice to know this information right now. Anyway, one thing I'll say about this 3AC situation is, yes, this is a contagion, or was a contagion. It's unclear like how much damage is really left to be done, but it does seem to be that there was some predatory selling, people taking advantage of knowing that there were some big players that would get liquidated, and really cause a positive feedback loop / avalanche, really, dominoes, so to speak, falling over as they brought price down. It seems to be the consensus theory here. But it looks like a lot of the damage is done. A lot of, it doesn't seem to be really much more room to go down in terms of that particular contagion. But who knows? It's dynamic. Like Luna goes down, and then it affects 3AC, and then 3AC affects Voyager, and so it's a lot of these companies are related, and it really is a contagion. So I don't want to act like it's over, but that is one of the reasons, or really a huge reason why crypto had such a crazy last 2 weeks in terms of downside. If ETH went down like 50%, okay, in like 2 weeks, something like that. Bitcoin, not much less. So a lot of people are just kind of assuming it's a good time to long because we've gotten through that. And to be fair, crypto just got battle tested. When you do have when you do have these liquidations, and a lot of people getting wiped out, you are kind of like burning off the dead wood. And I actually don't think this is bad for crypto long term. Of course, you're going to have people that are going to come out and chirp and say, "Oh, look at this! This proves crypto is a scam, and it's not safe, and it needs to be regulated." Yeah. But to be fair, we're really self-regulating ourselves right now. We're not getting a bailout from the Fed. We are getting bailouts from companies like FTX, but that's capitalism. That's the private industry. So I actually think a lot of this is like healthy. I'm not saying it's good for people that have to pay it, but look, if you're in crypto, it's risk. There's nothing about this industry that isn't risky at this point. It's a brand, it's a brand spanking new industry, practically speaking. It's the wild, wild west, and this is what you should expect. Growing pains. And people are trying different kinds of things. Some people will win, some people will fail, but that's just the way it is. Okay, not everyone made it to the West. Okay, not everybody, not everyone was able to make it out west and make a fortune gold mining, right? This is kind of a similar situation in the sense that it's very risky and nothing's guaranteed, but it's just crypto, and we welcome it. And to be honest, if it was easy, then the gains wouldn't be like they are in the good times, right? With the good comes the bad. With the big giant gains, it's going to come the big collapses. That's reflexive markets, and crypto is the king of reflexive markets, in this period of time. So anyway, that's all I really got, guys. Be careful in this chop. We have a options expiry on Friday. I think it's around like 2 trillion. You don't have to put too much really thought into really what that means, other than, there could be some jostling around and positions, big players getting in and out, and it could affect your, if you're trying to do a swing trade right now, probably not the best idea. It's going to be choppy in my opinion, but I do think you could see some movement maybe Friday or after, and if not then maybe closer to FOMC / CPI print coming up in July. But this is definitely tradable, guys. If you're using order flow, if you're using, like, I'll show you the tape I use. If you're using a tape like you see on the right here, you're using a depth of market that actually shows you some good information. You can trade this. It's just small scalps, and you got to get in and out. Again, that's not financial advice, not even trading advice, but just kind of giving you really how people are really, I would say successful people trading this right now, what they're using. They're using order flow, and they're not really sticking around to see what happens after they're in profit. All right, guys. Well, that's all I got. Until next time, happy hunting, friends.